In this slide, we are going to talk about sales ledger. Sales ledger, as I told you in the previous slide, it records all the individual accounts of the credit customers or trade receivables. Now, these trade receivables or credit customers, are the people from whom we are supposed to collect money. Now, I've written down three different customer names, or the credit customers or the trade receivables names in this particular case. Mr. A, is the customer to whom we made credit sales worth 600 on 13th of January. On 16th of January, he returned some of the goods, and we accepted the return of goods by sending him a credit note. And then, he made a payment. He decided to make a payment, on 18th of January. And for the prompt payment made by him, we allowed him a discount of 10, and he made a payment of 390. So 600 was supposed to be paid by him, out of which 100 was returned, which means 500 was pending, and out of which 10 was the discount. So it means he was left with 490, and then 390 was paid in the form of a check, which means 100 was pending, which has been written here as the balance carried down. So balance carried down, or the pending money to be received from Mr. A, is 100, and that is going to be carried forward to the next month. These accounts are going to be made in a similar way. Mr. B's and Mr. C's account, they are going to be made in a similar way as well. But sometimes if Mr. A is unable to pay, if he becomes bankrupt, we are going to do what? We are going to basically, instead of writing balance carried down, we are going to write bad debts, and that will mean that we are not going to be receiving any money from him in future. Now, when it comes to the sales ledger, we actually are combining two different types of journals. We combine sales journal and sales return journal while making a sales ledger. So sales journal, that is the entries coming on the debit side, and sales return journal, entries, the sales return entry over here, they are basically, we are combining the two journals, in which credit sales is coming from the sales journal and sales returns are coming from the sales return or return inwards journal, and other entries are also going to be coming from the relevant journals or sometimes T accounts as well. Relevant journals, when I'm talking about it, discount allowed is obviously going to come from the cash book, and bank is also going to come from the cash book as well. So we are basically combining a few journals when we are making a sales ledger. We are combining the sales journal and sales return journal and the cash book to get the results which are being displayed over here. So that is what sales ledger is all about. Thank you very much. I'll see you in the next clip.